all I could say is just keep on buying. Don't think the prices are too high. You know, that was a big problem for a while. Schiff Gold customers were stuck on the fence. When gold was at 2,000, they were afraid to buy. And then they were afraid to buy 3,000. Well, now you're at 5,200. And, you know, soon you'll be afraid to buy 6,000 and then 7,000. At some point, nobody will be afraid to buy because there'll be nothing but greed. But I think that's not going to happen for quite some time. And I think prices will be much, much higher. Again, we are still early. You know, people might say, well, how can we be early, Peter? Gold's at 5,250. How is that early? I mean, I started buying gold for myself and my clients when it was under $300. So clearly, if it's gone from 300 to, you know, close to 5,300, how can you say it's early? Well, here's the reason I think it's early. Central banks didn't really start accumulating gold till a couple of years ago. That's when they started, really like 2004, right? That's really when it began. When I first started buying gold, central banks were selling it. That's one of the reasons it was so cheap. Central banks were getting rid of their gold. They just started to accumulate it. So we're early in this de-dollarization process because all these central banks have a lot of dollars they need to unload. It's going to take years and years and years. Plus, they keep getting more. We're spitting out dollars. We have these huge trade deficits. So as fast as the world can get rid of dollars and buy gold, they get more that they got to get rid of. So we're early in the central bank de-dollarization process, and a lot more gold is going to get bought. We're even earlier in the private investors. Yes, you know, the East has been buying gold for years. The Chinese, the Indians, yeah, they've been buying, and they're going to keep buying. The difference is now the West is going to get in on the action because the West has been selling gold. American investors, all 2024, pretty much all 2025, were net sellers of gold. Just look at all the net redemptions that were coming out of the ETFs. So private investors in the West, which are probably Europe, Western Europe, North America, right, particularly the United States, I think 2026 is the beginning, maybe a little bit at the end of last year, but this year, 2026, is going to be really the first year where private investors in the U.S. decided to allocate money to gold and silver and gold and silver related equities. So this is year one. This is the ground floor. Yes, I've been buying these stocks for 20 years, right? I was early because I knew this was going to happen. I knew eventually Wall Street was going to figure out what I already knew. And, you know, I look at some of my gold stocks. Of course, I wish I had all my money in these, but I have a lot of stocks now that are 15, 20x what I paid for them. Amazing. Now, you know, my worst performing stocks are only 3 to 4 times what I paid for them now. I have a lot of stocks that are 5, 6, 7. But I mean, it is amazing now when I look at some of these prices and I look back at my earliest cost basis. But I was way ahead of my time. Right? Nobody was talking about this. I mean, I'm not saying nobody. I mean, yes, there were people, but people, you know, in the mainstream, Wall Street, you know, people that, you know, were highly regarded in the investment industry, managing big money, right? Nobody was doing this, right? I was kind of like a lone wolf in this approach. But this is the first year that I hear the mainstream, you got to be in gold, you got to have allocations of gold. And now, of course, as I said earlier, with tokenization and gold, you know, now being integrated into the blockchain, which is, of course, I've always said, I've been saying for years that, you know, the only thing that it makes sense to put on a blockchain is gold. That's it. You know, and so it's happening. It's happening now. The institutions are embracing gold in crypto. They're embracing it on Wall Street. There's tremendous demand that is coming for precious metals, and it's just starting, just now starting. That's why I've been saying the biggest mistake that people are going to make in this space is selling. and thinking they did great. I haven't sold anything, not a share. I haven't sold a single share or an ounce of gold or an ounce of silver because I think there's so much more upside coming because I understood that this was going to happen. I've been preparing for it for longer than I thought. Yes, when I started buying gold, back in the 1990s, right? I thought we would have had a dollar crisis sooner. We haven't even had it yet. Now, what's happening in gold now, to me, is a real indicator that it's coming. It's coming soon. And that's another reason why I don't want to sell anything. Because, what am I going to buy? I want gold and silver. We're now, solidly above $90 on silver. Don't focus on the fact that we did get to 120. Focus on where this rally started. A year ago, silver was like $30, so it's more than tripled. In fact, I jotted down the returns on gold and silver so far for the year, 2 months in. Gold is up better than 21.5%. That's, 10% a month. If it does that every month this year, the price of gold will more than double on the year. Now, I don't expect that higher return, but I would not be surprised if that's what happened. It's not completely out of the question. Silver is up almost 30% so far this year in 2 months, 30% increase in the price of silver. Now, the mining stocks have done better than gold and silver, but not nearly as much as you would think. So the GDX is up 35% on the year, and the GDXJ is up 38%. These are returns in just 2 months. Now, as I predicted on my prior Schiff Gold market wraps and on my regular podcast, I was saying that I believed the GDX and the GDXJ, those are two indexes of gold mining stocks, would hit new highs before gold and silver hit new highs. And that's exactly what has happened. In fact, the GDX is at an all-time record high, so it's never traded this high. But the GDXJ still has a long way to go to get back to where it was in 2011. Now, I think it will take out that high before the end of 2026. But for now, it's just the high since 2011. But for the GDX, it is an all-time record high. But by the time gold gets back up to 5,500 and change, and silver gets back up above 120, which may take a little longer, but it's still going to happen, and it should happen this year. But by the time the precious metals get back to those record highs, the mining stocks, I believe, will be way above where they were the last time, gold was 5,500, which is why you should still be buying these stocks. They're still ridiculously cheap. I'm still expecting a huge move up in a day. I mean, where these stocks go up 20% in a day. That hasn't happened. I mean, they go up 2%, 3%, 1.5%. It's slow and steady. There's no mad rush to buy them. There's no mania. It's just a slow, steady climb because the buyers are still worried that the price of gold is going to crash, which, of course, it's not going to do. If anything, it's going to crash up. They just don't seem to realize that. But let's contrast what's happening in precious metals to what's happening in the stock market, because Donald Trump likes to brag about how great the stock market is doing under his presidency, how it's the Dow hit 50,000, 3 years ahead of schedule, or 4 years ahead of schedule, he said, which is laughable. But yes, the Dow Jones did hit 50,000, but it's really no big deal because when he took office, it was 44,000. So that's not that big a gain. But the Dow Jones is now back below 49,000. So we're more than 1,000 points below 50,000. But what's significant is that on the year, the Dow was only up 1.25%. That's it. Less than 0.75% per month. In terms of gold, the Dow is in a bear market just this year because the Dow has lost 20% of its value priced in gold. But the Dow is the best performing of those major indexes. The S&P is only up 0.3%. 3% so far on the year. And the NASDAQ is actually down by 2.5%. So how is Donald Trump going to be claiming that we've got this super hot economy when the only evidence is the performance of the stock